Hi guys, it's Brian from financialtradingjournal.com, and this is episode 7 of my How I Trade Binary Options series. And in this episode I'll be covering Fibonacci retracements. So just before we start, from episode 5 and 6, those two episodes form the backbone of my charts that I use for trading. Episode 5 is how I set up all my support resistance from the higher time frames down to the small time frames. And episode 6 is how I set up the MAs and SMAs, EMAs, and Bollinger Bands for the trend changes. Now, from episode 7, this episode onwards, everything else will just be an addition to what I use in those two episodes. So you can either use them alone, you can just use up to episode 6 if you want, or you can use either episode 7, 8, 9, 10, whatever, add them on or use all of them. It's up to you. The choice is yours. Just choose whatever works for you, okay? You don't have to conform to what I use because you might not see what I see. So you use what you see and you use what works for you. Because in the end, it's you making money, not me. I don't really care if you make money or not. It's great if you would, but choose the strategy that works for you. So a little background info about the Fibonacci retracements. It was developed by Leonardo Fibonacci. He's an Italian mathematician. He stumbled upon the Fibonacci sequence, which is basically starts with 0 and 1, and you add the last two numbers to get the next number. So I did the first couple numbers here. 0 plus 1 is 1, then 1 plus 1 is 2, and so on and so forth. And you go up the sequence, and it goes on forever. And then basically, if you divide the higher numbers, so let's say you divide like 55 by 89, you get 61.79. 89 divided by 144, you get 61.805, and so on. You keep doing that. Eventually, it conforms to 0.618 or 61.8%. And that's the golden rule for these retracement levels. And so just keep that in mind. So we'll be drawing the Fibonacci retracement lines later on in this episode. So starting with the instructions of how to do this. These usually it's either called Fibonacci lines or Fibonacci retracement lines, or I don't know what your chart calls it. It's something along those lines. It's just Fibonacci and retracement or lines, something like that. You should find that it's usually two lines with a middle dash line. So basically, you use this for trending markets, regardless of the direction. It could be uptrend or downtrend. Then basically what you're doing is you're connecting the lows to the highs in one trend only. So let's say there's a downtrend, then it pulls back, then a downtrend, then another pullback, then a downtrend. You connecting the high of the start of the downtrend to the low of where it started to bounce, and then we're seeing how far it pulls back, which is the retracement level before you re-enter the trend again. So this basically just helps you find pullback levels, rather than you can use PA and just draw support resistance on the way down. And depending on how you draw it, it may not always align properly. You have to modify or adjust the points to make sure that the levels coincide with the current support resistance levels of your trend, which I will show you. And once the trend is done, the fib lines are obsolete. Okay, it's done. So as soon as one trend is done, you erase the line and it pull back, you enter, erase the line, then the next trend you draw it again, erase it, draw it again, erase, draw again. Don't keep them all on your chart because it gets really, really messy, as you'll see. So I am going to go to free stock charts again to show you guys how to draw this. So I'll be using the Euro USD again, and these are the trend lines from before. And I erased the ranging channel lines from the previous day when I drew them on the small time frames, because they're going to get annoying really soon. So on the side, you'll notice, see that all your drawing tools are here. There is this one, the Fibonacci retracement, which we'll be using, and there's also a Fibonacci fan, which I have not used yet, so just make sure you pick the right one. So Fibonacci retracement, and this is the 5-minute chart. You can use this on pretty much any time frame chart, but I'll talk more about that later on. This is the 5-minute chart. So let's start with, say, this one. This is a trend here, right? So this is the low, that's the high there. So you're going to pick the tool, you're going to start here at the low, drag it all the way up to the high, something like that. So this is zooming in. So just to correct it, that would be the exact low and high. And you'll see that this is the high. It retraced back to 38.2 before bouncing up again. But this isn't really that good because this was an overall range anyways. But just to show you guys how to draw it. So that's one. That's after this trend is done, you erase it. Going on to the next one. I'll use this now. So pick the low again, up to the high. Oh wait, no. Up to... Nope, that's a crap example. See, it's so small. This one. I'm just showing how to draw. I'm not actually using examples. I have 9 charts for examples later on. So this is the high. This is the start of a downtrend. You can see consecutive candles, right? It's a downtrend. And yesterday, when we were going over this chart, there was the wedge forming. So this is breaking outside the wedge. You see a pullback. So if you were using fibs yesterday in combo with the wedge formation, pull back up to this level, which is the 50% mark. The numbers are kind of small on free stock charts, but they're on the left side here. So that's the 50% level. You know, it totally ignored the 23.6 level, and then it went to the 38.2. Kind of ignored that, then went to the 50, then this one retraced. So you would either wait for the confirmation of this one, and the next one you enter, and you'd be fine because this bar started at 8:35 and you would have expired at 8:45 down here. You would have won. Continue trading, you still would have won the next one as well. So that's just an example of what happens. Back to the PowerPoint. So the strategy is this. So 61.8, as mentioned previously, is the key level for these fib retracements, but they're also drawn, as you saw on the chart, for 23.6, 38.2, and 50% levels. These levels aren't used that much by traders, but if you want to, you can try using them. Like on the chart that I just showed you, some of them stopped at 23.6 and some of them stopped at 50. So you have to just watch the PA and see what happens. So you're basically combining PA with these retracement levels to see how they react to each one, and basically the retracement levels forms the support resistance of your pullback and of your bounce, which will later form or whether or not it bounces. So basically, if 23, this is a repeat of what I just said, 23.6 doesn't hold, it goes to 38.2. That doesn't hold, it goes to 50, and finally 61.8. 61.8 is a key level which you need to watch more carefully than the other levels, because that's the most popular one that retraces, and sometimes it may overshoot. It's not like foolproof. You can't draw it exactly. So, and if it overshoots too much, then it's useless. Just erase the lines. It's not gonna do a fib retrace. So you always have to use your PA to gauge the action to see what's gonna happen. And keep in mind, this is a strategy. It's not a system. I don't use systems. Okay, systems are bullshit because systems are designed to be rigid. It's just fixed. You do this, get to point A, then point B happens. No. The markets are dynamic. If people haven't noticed yet, it's dynamic. It changes all the time. I don't use a system. I use strategies to help me. That's why I don't use robots for trading. Some pointers on the time frame is these fib lines are usually drawn on higher time frames only. Usually, because higher time frames tend to retrace better than, say, a 1 minute chart or a 5 minute chart, because 5 minute chart you could have like huge price swings for no reason, and that would just mess up your fib lines. You know, so like during data release, you're gonna have like, say, 5 consecutive big bars, and then suddenly it goes regular again. So you can't really use that probably because that's not a proper downtrend, and there's no pullback from that because it's a news release, so it's just gonna keep going. So when you're setting up your charts, like in episode 5, when you're on like the weekly chart or daily chart, you may want to consider using fibs to help you draw the support resistance lines, or to watch for what specific levels that price may float with the support resistance levels. And for the smaller time frames, if you can get in the habit of drawing them, that would be great, because they do follow occasionally, and when they do, they usually happen really nicely. If they don't, then they get totally ignored. So you just do make it a habit and do them. I kind of forget to do them sometimes. Like, that's why not all my charts have a fib line. I don't always focus on that. But then some readers will tell me, it's like, oh, Brian, look on that chart. There's actually a fib line. If you drew one there, that's why it retraced. And I'm like, well, yeah, use whatever strategy works for you. If you can remember to do it, then do it. And always remember to delete the old fib lines after the trend is over and draw new ones, and then delete them and draw new ones and delete them. Okay, that's the key thing. Don't use the same one over and over again. You're gonna make a lot of losing trades that way. So I'm gonna start to get on the examples now. I have a total of 9 charts, and these are fairly straightforward because all you're looking at is the levels. So this is Euro USD on January 6, 2011. I've probably shown this chart like 3 times now, and each time there's something new to be mentioned. So this one uses a combo of the 26 EMA cross on the 1 minute chart, but also it uses the fib lines, which is shown on the 5 minute chart. So there's the low, there's the high. I adjusted it, I guess, to meet there, or maybe not. I don't know. Maybe that's just me drawing it crappy because this is my newbie days. I didn't reform my strategies properly back then. So anyways, but this is the fib lines, and the lowest one, so this is an uptrend, this is the pullback, and this is the bounce. So it goes 100% is down here, 0% is up there, and it retraces either 23.6% of this whole thing, or 38.2% of the whole thing, or half of it, or 61.8%, which is the popular choice, and that's where it bounced. So this is a combo play of the 26 EMA cross there on the 1 minute chart, and a 61.8 fib bounce. This is Australian USD on January 6, 2011. This is well, this is a fib play for sure, because that's a fib line, and that's again 61.8 on the top there, drawing between that. The solid line represents where it connected it, and the fib lines are the dashed lines, which shows the entry. And it's always, and the numbers are on the side here. So you can see this retraced at the 61.8 level, touched it, immediately went back down. If you want to be risky, you can just trade on the touch. If you want to be safer, then you wait for confirmation and see what happens after that point, and then you enter on the next candle. So this was back then. I just entered on the touch. I trade the touch for certain things too nowadays, like the ranging, because there's a high probability entry anyway, so might as well trade the touch. This is combination of pin bar and the cross and the fib lines. So this is when everything comes together. You're using PA with candlesticks, with fib lines, everything comes together. So clearly there are 2 pin bars there. Anyways, this one I drew from this downtrend here. This is the 5-minute chart. And this one, so that gives a retracement level of 61.8 there. There's a pin bar forming. After it bounced off the 61.8, it forms a pin bar. That's a pretty good confirmation to me. I enter in the next candle, and that wins. So you use everything here. You know, if you didn't have knowledge of candlesticks, then you should watch episode 2. If you don't have knowledge of PA, you should watch episode 3. And you know, you use everything combined, and it happens really nicely. Again, this is Australian USD January 6th, and again we have pin bars forming. So that's drawn from that downtrend. This crosses the 61.8. See, that's why it doesn't always go exactly at that level. So it overshoots a little bit, but it forms a pin bar. Good confirmation. There's my entry. This is Euro USD on January 7th, 2011. So there's a downtrend. You could, if you wanted to, you could draw from here, from this low here, or one of these lows up to this high, and this would probably give a 61.8 retracement as well. So I'm probably guessing from this low to here, just eyeing it, this would be 61.8 for a call on that level. But anyways, here is for this one. So that would be the first one for a call, if I did a call. Then you erase it, you draw this one. This gives the downtrend for a retrace down. And this is hitting the 50% level, because the lines are always 23.6, 38.2, 50, and 68, 61.8. So that's me entering on the 50 since it got kind of choppy there. Or you could wait for 61.8. Sometimes it may not go back up, but either way, they're both decent entries. It's a small range anyways. This is Euro USD on January 9th. And this is uptrend here. This is a range actually. Looking at it now, it's a range, but you can draw them whenever you want, typically on a trending market. But anyways, there's an extended uptrend here. Pull back to the 61.8 and you enter. And this is me in my newbie days when I just chase things up. Now I would probably only trade once here and once there, but this one is just, I like to trade multiple times before. This is Euro USD on January 9th. So again, if you wanted to draw the uptrend, you could connect this low here to that high here. So that would be lasting an hour. Then you would probably have a 50% pullback. This is about halfway from this whole thing for a call there, but I didn't. So here is this downtrend, although really choppy. You have a retracement level on the 61.8 and you enter. And there's also the crosses that already happened, so you know it's kind of trending down. But the angles aren't that great here. This is Euro USD on January 10th. And let's see here. Well, first of all, looking at the hourly chart, you can tell there's a range, because it's stuck between here, down here. This is the high probability lines. These are the high probability lines. Then you draw the lower probability lines in the middle, and this is pretty much overall a range. Looking at it now, and I you could trade all those touches of the pin bars there. But anyways, for the fib levels, drawing the downtrend here, this is why this fails, because I didn't know anything last year. So this is trading the touch. So this breaks it, then this closes down, and I'm assuming it pulled back the next one. That's why I put. But in actuality, it's actually just ranging. That's why it doesn't work in a range, because you know it's just going to bounce between each boundary of the range. This is Euro USD on January 10th again, and this is inside the same range, but this is for a different bounce, and I guess this one was closer to expiring in the money, and that's why I won that one. This is the 61.8 level again, and there is a pin bar there. Confirmation, trading, and you win. And let me see. Yep, that's all the examples. That's it. I'm done for covering fib lines. Hope this helps you. Since you can use this on both 1 minute chart and 5 minute chart for lower time frames, you can use them for 60-second options, and for that I recommend Trade Rush. Otherwise, if you use normal options, I would recommend 24 options. Both of them are good brokers. Provided links to both of them below, and I have my blog link and Twitter feed as well. Thank you for watching. Hope you guys enjoyed it. I'll see you guys next time.